So, Rachel, I want to introduce you to all my followers because I want them to know who you are, what you do, because you have a very specialized area of tax that you focus on. And I'm sure a lot of people are interested in it. So, can you tell me a little bit about yourself?
Yeah, so I run a CPA firm that specializes in the intersection between Puerto Rico tax law and IRS tax law. And so what we really hone in on is Act 60, which, if you haven't heard of it, is a really unique tax incentive system that allows U.S. citizens to relocate to Puerto Rico and get a 0% tax on capital gain, interest and dividends, and a 4% corporate income tax rate.
Yeah, that's a pretty sweet deal, and which is why people are probably interested. This is a very legitimate IRS and tax law between Puerto Rico and the U.S. federal government that people should be aware of. Let's start with the history of how we got here. We all know that tax laws generally have some kind of public policy behind them, right? Can you tell us a little bit about the history of how we got here and why these laws were put in place?
Yeah, definitely. So if you've ever heard the phrase no taxation without representation, this perfectly applies to this situation. Puerto Rico is a territory, which means they don't have voting representation in Washington, D.C. They don't have voting representation in Congress. So as a result, the U.S. federal government can't enforce their laws down in Puerto Rico. So they were able to create this robust tax system to really bring and attract capital and entrepreneurship to the island. If you've heard much of Puerto Rico over the past few decades, they've really been struggling economically. And after Hurricane Maria hit and some other devastation to the island, they really needed more funding and more talent really being brought in to uplift the economy for generations to come. So they created this set of tax incentives to hopefully bring people from the U.S. down to Puerto Rico and establish lives down there.
How many people in the U.S. are taking advantage of the program? I believe it's a pretty small number, right?
It's bigger than you'd think, actually. Around 7,000 decrees have actually been approved already, and I believe there's around another 7,000 to 8,000 currently in the process of being approved. That's not to say that they're moving down definitely. When you get the decree, you have a year to move down. So some of these people are applying, see if they get it, maybe playing out their business situation a little longer and having that opportunity to move down. But a lot of those people do decide to make the move. So we're seeing more and more people coming down. You can see it with the infrastructure on the island. There's around 2 to 3 large kind of upscale communities that are being built with the idea that more and more people are going to be coming from the U.S. down to Puerto Rico. So it's quite an exciting time.
What kind of people are we seeing? Are we seeing families? Are we seeing business owners? Are we seeing everyday people? Are we seeing people that are primarily doing investment type? What kind of people are taking advantage of this? And what kind of people do you think it would be advantageous to?
Yeah, great question. First of all, I think everyone across the board, when you're talking about age, family type, etc., we're seeing absolutely everything. When we're talking about what type of business you might actually run, if you're coming down for the export services decree, it generally tends to be services that are remote. So it's things that you can export off the island. The idea behind it is you are exporting services to the US or somewhere foreign, you're not providing services in Puerto Rico. So if you're a plumber and you want to move down to Puerto Rico and start doing your plumbing services in Puerto Rico, it's not going to be a great fit for you. You're not going to qualify for that decree. But if you run a digital marketing business, an e-commerce business, you're in private equity, hedge funds, day trading, anything like that, it could be a great fit. There's also a really big portion of people who don't even have a business at all, and they're down there for the individual investor decree. And so that's investments. If you are saving for retirement, you have a big investment portfolio, you're a day trader, you're big in cryptocurrency. That's also really popular. I would say the common denominator across everyone, though, is they're actually willing to move. I get questions a lot. Hey, can I VPN down to Puerto Rico? Hey, how do they actually know that I'm down in Puerto Rico? All these different questions. To actually comply with Act 60 and comply with these requirements, you need to establish residency in Puerto Rico, and that means genuinely moving. So whether you make $100,000 a year or you make $100 million a year, the common denominator is you're actually willing to move. And so you have to be able to dedicate at least a few years of your life to moving down there and try to establish a base in Puerto Rico.
Have you seen any audits or any kind of litigation arising out of this for people that are not living there? And how is the government really tracking that? I would assume with passports and flight log of things of that nature, which I think would be easy to track for the internet. Can you tell us a little bit about that or what you've seen?
Yeah, definitely. So the IRS actually has a campaign going down in Puerto Rico where they're focusing on people that have moved down improperly. And so there's a huge emphasis on doing things correctly the first time around. I have definitely seen audits from people that they keep their nice home in San Diego and they go back and they only spend 183 days on the dot in Puerto Rico and they spend the rest at their same house in California, or they left their wife and their kids back in Florida and they travel back on the weekends. I am seeing seeing audits of people not following the rules, and people are arguing either on the state side or on the federal side that you never really left, that you never really renounced your residency in the United States, and you never really established it down in Puerto Rico. There's actually a very big case that came up, I think Gajwani case earlier this year, and it's less of a residency audit, but that was a focus of the audit, was looking at, hey, did he actually establish residency on here? When did he establish residency, and how did that play out? And unfortunately, he was actually found guilty in this instance, and he was being prosecuted. So it is something to worry about, but that's why it's important to get legit information. There is a lot of misinformation on the internet coming from people that just moved down themselves, that aren't lawyers, aren't CPAs, aren't enrolled agents, and don't have legitimate information backing them. It's just kind of a telephone who's who, that they get this information. They're like, well, this person told me that this person told me that we can do this. My biggest advice is actually seeking out legitimate counsel. It's important that you do things correctly the first time, because there are a lot of eyes on this, and it is a great opportunity if you're willing to take the proper steps to comply with it.
Outside of the requirement of being there and establishing a residency, what other requirements are required generally?
Yeah, so we just talked about the presence test. There's the tax home test. That means you must be conducting your business from Puerto Rico. So the idea behind that is, hey, I can't spend half the week in Puerto Rico and then I fly to New York to my office, work out of New York, and then I come back the rest of the week. You need to actually be conducting business out of Puerto Rico. And then the third test is the closer connection test. So I like to call it the heart test. Have you actually moved your heart down to Puerto Rico? Have you joined churches or social organizations down there? Do you have a life down there? Are you building a community down in Puerto Rico? And have you left your community behind in the United States? The big other requirement for Act 60, there's a bunch, but the most noticeable one is you need to buy a property that serves as your primary residence within 2 years after you move down to Puerto Rico. And so this one is very important. The idea behind it is you're uplifting the general economy as well, but they also don't just want you staying in rentals your entire time there. So within that first 2 years, it does need to serve as your primary residence. That doesn't mean, oh, you're renting out a really nice beach penthouse and you're buying a little shack somewhere else that's serving as your primary residence. It actually needs to be where you're living in case anyone ever checks. You want to show that, hey, I've moved my belongings from the US down to Puerto Rico to this home that I now own. And so those are the main requirements. It gets a little bit more nuanced when you're talking about businesses moving down. There are other requirements that you need to meet, like audited financial statements, hiring employees, etc. But those are the big ones that people talk about for residency purposes.
As far as agents coming down and like knocking on doors, are we seeing revenue officers is what you're saying? Are we seeing revenue officers coming down and door knocking to see if people are there or not?
So I saw a Wall Street Journal article where apparently there's a DOJ agent that is stationed down there, potentially undercover, to try and bust people. Mind you, there is actually probably some illicit activity happening in Puerto Rico that's not just Act 60 related, but they do have an agent down there that is prosecuting and like looking into things. I will say, you're not getting a guy knocking on your door being like, hey, I'm checking if you're living here. People have this false sense for a couple years now that there haven't been as many audits, so they think they're okay. But things are actually starting to ramp up more than you think. I actually know someone in the resort that I spend my time in. He's lived in Puerto Rico for 10 years and just got his residency audit. So it's one of those things where it could come at any point in time. Whether or not you're seeing them around doesn't mean they're not actually doing work. And so it's important that you're following the rules even when you're 10 years down the road. You need to be as diligent as you were in your first few years. It's really, really, really important.
That's a good point, that you have to be consistent. What happens, I guess, if you lose your status? Do they go back and assess the taxes if the act doesn't apply, I would assume?
Mm-hmm. Yep, they go back and assess it, and you do need to pay those taxes. One thing that people forget is you can actually be a resident of two places. For example, I'll give California as an example. You can stay there for 9 months, or alternatively, if you have enough of a connection to California, they can claim you as a resident. But if you stay 183 days in Puerto Rico, you could be a resident. So Puerto Rico could claim you because you met the day count. But then California can claim you because you still have so many ties to California. So they're going to go back, retroactively assess everything. You're probably going to lose the decree, and you're also going to need to pay all those back taxes and penalties that you missed. So it's really, really, really important from the first step of things to be conducting yourself in a way that you feel confident. If you're just trying to use this to escape taxes and you don't actually plan on dedicating a few years of your life down there, and you think, hey, I'm going to move down January 1st, I'm going to sell my business on the 16th, cash out, stay for a year and move, that's 100% getting flagged. I generally like to say people should be staying for a minimum of 3 years. There are kind of a lot of residency rules that surround that 3-year rule. Most people do tend to stay a little bit longer, but it is really important in your first few years. I recommend staying more than 183 days. There are obviously other ways to meet the presence test, but it's important to show that, hey, I've actually dedicated my time to living down there. The other thing I like to mention too is this is probably one of the biggest misconceptions. People running a business think they can spend 183 days down there and the revenue for the whole year for that business is going to be sourced to Puerto Rico. That is not true. If I spend 183 days down in Puerto Rico and I spend the rest of the year working from the US, that's going to be split between two. So days for residency purposes are not the same as days for income sourcing purposes. And that is the biggest issue I'm seeing in Puerto Rico right now as people 3 to 4 years down the road finally get good counsel and someone talks to them about it and they're like, wait, so you're telling me I actually owe taxes for those last few years in the US? I haven't been filing a US return at all, but I've been staying in my house in New York the rest of the time and working from there. Doesn't work. So it's really important to understand the nuances of how this works and really seek actual advice and not just kind of read the law for yourself, plug it into ChatGPT and see where it goes.
What are the qualities that you're looking for in somebody that practices this area? Like if you're qualifying a person.
I would say they should have some type of article, YouTube, some type of presence talking about Act 60 or Act 60 listed on their website. A lot of people like to say that they think they can handle it and they get in over their head. You want someone that is known, that has taken on clients before. You don't want to be kind of the guinea pig for them learning how Act 60 in Puerto Rico really works. I always suggest that it's important to get advice on both the US and the Puerto Rico side. Some people only ever hire US practitioners, and then some people only ever hire Puerto Rican practitioners. There's a very different level of quality and service on both ends. And I would also say there's a difference in knowledge. You really need them to communicate with each other and to understand where that middle ground is. I've had instances where maybe a Puerto Rican attorney or Puerto Rican CPA will say one thing that totally works in Puerto Rico, but they forget that their client has a US presence, right? And they still have an entity back in the US, or they still have properties back in the US. And then that's when it's important to really loop in the US side too, because it might not be the most beneficial on that end, especially because a lot of people are either considering exits, or alternatively, they don't plan to die in Puerto Rico. They want to move back eventually to the US. It's important to think about planning 5, 10, 15 years down the road, not just thinking about what you're going to do for this year. The other thing I would recommend too is looking up reviews online. There are plenty of communities, especially for Act 60, that talk about these types of things. You can get a lot of information. I would say a group of maybe 20 practitioners that focus on Act 60. You can look into who's using who, what people are saying about them, complaints. You can join these WhatsApp communities for the expats located down there. And you can ask people who they've been using. I'd recommend having introductory meetings with everyone and really getting a pulse for what it is they do. Just because they specialize in Act 60 doesn't mean it's Act 60 for your situation. They could be focused on R&D credits. They could do a lot of private equity and hedge fund people. Or they could be exactly what you need and just the average person moving down for investing. Completely depends, and you really need to shop around.
Is there anything else that you think people should know about this? And then what's the best way to contact you if they're interested in learning more?
Yeah, definitely. I think the biggest thing that I like to point out is that this is a great fit for people looking for financial freedom or for a competitive edge in business. I think a lot of people are stuck in high tax paying states or even just paying a high federal tax rate. And you could be using that money for so many things, to live a better quality of life, to, buy a nicer house, to retire earlier. Or if you're running a business, you're dealing with a startup, you might want to get that competitive edge and funnel that money back into your business. Or alternatively, just get some extra time to spend with your family. I think it's a great fit for a lot of people that are willing to move and do things the right way. And so if you have additional questions about this, there are 2 great ways to reach out to me. My website, rachelfarriscpa.com. I offer free consultations for anyone that wants to learn a little bit more about Act 60. And then I also have a website called maximizewealth.com. And it offers an education course. There's a free preview on it. So for those of you that don't necessarily want to hire counsel straight away or a professional, you just want to look into yourselves, there's around 2.5 to 3 hours of content that walks you through what eligibility looks like, tips and tricks, how to move down, how to fill out the forms. And so if that's something you just want to apply for Act 60, see if you get it, learn about what it actually takes to move down. It's a great introductory. You will obviously still need to hire a professional to, kind of do those things for you, but it's a great way to check it out without having to spend thousands of dollars on legal and CPA fees to even see if you're a good fit.
Yeah. That's really great. I always love when people create content for people because sometimes it's just about education and awareness first and hearing it from legit sources like a CPA, tax attorney. So I really appreciate you coming on, sharing all of your knowledge with all my followers. So thank you.
Thank you so much for having me, Alyssa.